Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Get ready for an exciting week in the financial world. We've got the all-important US monthly jobs report, OPEC meeting, and central banks in Australia and New Zealand announcing their latest interest rate decision. Market watchers will be looking at Friday's non-farm payroll report for an update on the labour market's health, which has remained robust despite rate hikes from the Federal Reserve. Reports on February job openings on Tuesday and March data on private sector hiring on Wednesday will also provide valuable insight. Don't miss your chance to win a limited edition branded mug. Simply like this video and answer the following question in the comment section. What is the second most traded currency? A. The euro, B. The US dollar, or C. The pound sterling? Make sure you are subscribed to our channel to be eligible to win. The giveaway will take place once we reach 300 subscribers. T's and C's apply.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the US dollar started the week higher due to inflation fears resurfacing after a surprise announcement by major oil producers to cut production further. Traders are wagering the Federal Reserve may need to increase interest rates in their next meeting. However, data on Friday showed that US consumer spending rose moderately in February after surging the prior month, with inflation showing some signs of cooling, even as it remained elevated. Now, let's look at our analysis on USDJPY. The Ninja is currently just under the primary resistance at 134. If this resistance level is broken, we could see a rally up to the next resistance at 136. Should this resistance, however, be respected, we could see a retest of those lower levels at 132. Moving on to Wall Street. US stock futures were trading in a mixed fashion during this morning's trade, after major US indices closed out a positive week as easing PCE data boosted investor sentiment. The Dow Jones Industrial Average added 1.3%, the S&P 500 added 0.5%, and the Nasdaq lifted 1.7%. For the week, the Dow lifted 1.2% to an over 4-month high. The S&P popped 3.2% to 6-week highs, and the Nasdaq gained 3% to finish at 8-week highs. Now let's shift our focus to the S&P 500 analysis. The US 500 is currently under that resistance level at 4,100 and is still trading within that ascending channel. If this level gets respected, we could see a retest back down to that 4,000 level. However, should we break this resistance and get a close above that 4,150 level, we could see a rally all the way up to that 4,300 level. Moving on to commodities. OPEC Plus is likely to stick to its existing deal to cut oil output at a meeting today, after oil prices recovered following a drop to a 15-month low. Oil has recovered towards $80 a barrel for Brent crude after falling to near $70 a barrel on March 20th. As fears ease about the global banking crisis and as a halt in exports from Iraq's Kurdistan region curbs supplies. Looking at our analysis today on crude oil, WTI opened with a nearly $6 gap this morning, just slightly above that primary resistance level at $81 a barrel. We have now broken back below that resistance level, and we could potentially see it come back to retest those lower levels at $76 a barrel. Should we, however, break back above that resistance level and get a close above that $81 a barrel level, we could see a potential rally all the way up to that next primary resistance at $84 a barrel. Lastly, let's finish things off with gold. The yellow metal pulled back this morning as markets locked in some profits after a strong first quarter, with focus now turning to a slew of US economic readings this week for more cues on monetary policy. Bullion prices surged over 7% in the first 3 months of the year, although a bulk of these gains came in March amid growing fears of a US banking crisis. While government intervention calmed markets concerned over an imminent collapse, the yellow metal has still remained relatively underpinned by safe haven demand. Taking a look at our analysis on gold, the yellow metal has broken that diagonal support level or trend line and is now hovering just above that primary support at 1950. Should the support level be broken, we could see a sell-off all the way back down to that 1900 level. However, if the support level gets respected and we get a close above that 1955 level, we could see it go back to retest those higher levels at 1970.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.